So, newsflash, the market's gone up dramatically since New Year's 2018. In fact, the S&P 500 in January was up 5%. That's a pretty good clip. Not that you annualize these things, but if you did annualize it, that'd be 60%. So that's a heck of a way to start the year. Money is pouring into mutual funds. All the traders that were hesitant to get into stocks before 2018 because of fear of another great recession, those people are now putting their money in, possibly at the end of the cycle, who knows, but they are putting their money in. And so there's a tendency among options traders, and I'm talking to them all day in our Options Tribe Skype chat and so forth, that they just don't think this is rational. This is crazy. This is euphoria. The market can't go any higher. This is irrational. Well, I have a view on that, and the view on that is people saying that are looking at charts, and charts are great. Charts are extremely helpful. There are people who get very, very rich trading off of charts. But you can't ignore the fundamentals. And if there has been a fundamental change in the market, that will cause stocks to move a lot. And in this case, there was a gigantic fundamental change in the market, and that is there was a tax bill that passed that dropped the corporate income tax rate from 35% to 21%. In case you were wondering, that is huge. That factor alone is huge. Let's take an example. Say a company has 10 million shares outstanding and it's trading at 17 times earnings. So let's take a look at last Friday. As of last Friday, the S&P 500 was trading at 23 times trailing earnings. So for a stock to be trading at 17 times earnings is hardly preposterous. In fact, it would be sort of normal, maybe slightly low, okay? So let's take in the example of this hypothetical company that it made $500 million pre-tax. Well, if you apply a 35% tax rate to that, that means that the per share earnings for that stock would be $32.50. This is just hypothetical. So if you multiply that by 17, you should get a share price of $5.52 on a stock that's trading at 17 times earnings. All right. Now let's take that same stock and cut its tax rate from 35% to 21%. Well, now at that 21% tax rate, now the per share earnings are $39.50. Before it was $32.50, now it's $39.50. You multiply that by 17, you'll get a stock price of $6.71. That is a 21% increase. Well, guess what? Stocks are only up about 6 to 7% since the tax reform was announced. Now, some of that may have been baked in already, but to say that the market is acting irrationally, isn't that kind of pushing it? So you can't look at a chart and reach conclusions about the proper price of the market in the long run. You shouldn't get sucked into thinking that the market can't go higher because you're not used to it being this high. That's just silly. All you can do is follow your trading disciplines and allow the market to do what it wants, whether it's truly irrational or whether it's actually just a great time for corporate earnings, which is driving stocks up. I'm not saying that I think the market's going higher. I'm just saying that to rule that out as a possibility is ridiculous. So follow your trading disciplines. Listen to what the market is telling you and craft your trading around what the market's actually doing, whether you think it's irrational or not. Thanks very much, and we'll see you next week.